Good morning. This is the video newsletter for Buy Sell Short for Sunday, November 13th. We got a lot of charts to go over, so let's jump into it right here. We are looking at the Dow daily chart to get started off. As you can see, pretty interesting week. Yet again, we had more European BS to essentially give us buying opportunities in this market, as has been the case since the October lows. If we have a big sell-off, and the reason is European news, you buy the big sell-off and you wait for the inevitable rebound. 400-point drop on Wednesday, 400-point rally Thursday and Friday. Pretty much just like it's been for the last 7 weeks in this market. The reasons, again, they went after Italy this time. Ended up forcing the resignation of the Italian PM. That news sent the market back up. We now have a new guy picked for the Italian PM. So it's going to be interesting to see what the slant is on that tomorrow. We'll get a better idea from the futures trading late tonight and tomorrow morning. But there is going to be an opposition party. Not everyone's agreeing to the guy they picked. So let's see what the spin is going to be. However, we do have a lot of positive things in this market. I think the chart looks great. We've got very strong support in the 11,400 to 11,700 area on the Dow. Now, there's an article I posted on the website. Just go to the website, check on articles, and October was the fourth strongest October we've had in the last 50 years. Why does that matter, you ask me? Well, I'm someone who has, over the last 10 years, loved trading off trends. We trade off charts. These historical trends end up doing us very, very well if you pay attention to the right ones. Since 1950, there have been 20 strong October rallies in the market. 17 of those 20 gains, or 20 big October gains, have seen the market run, on average, 6% from now until January 31st. Perfect. That is exactly the scenario we have been calling for in this market throughout the summer, just waiting for it to happen. Now, next week is going to be an interesting week in the market. Could give us some pause. We've got the debt commission, those idiots in Congress who can't agree to anything, are unlikely to agree to any deficit reduction next week, and that's going to be the news that's probably going to start dominating. You might see some shorts come into the market later in the week, early next week. But keep in mind, they've already set up automatic triggers if no deal is met, and those triggers result in automatic, $1 trillion in cuts from the budget. But the thing to keep in mind is those cuts don't take effect until 2013. What does that mean? Essentially, they're meaningless. It's after the elections. We'll have, hopefully the Republicans will get swept out next November, and we'll be able to essentially come to a new deal. Whoever gets elected is going to get rid of this deal anyway. So if there is a sell-off into the debt ceiling crap next week, it's going to be another buying opportunity. And unless we see, those rating agencies come out, I think this 11,400 to 11,700 area is going to be rock solid in the market. As you can see, stochastics has held the 50 level very nice. I like seeing that double dip test and a bounce. 20-day exponential is rock solid. A break through that previous high, 12,284, and we are off to the races. If we look at the 15-minute chart, you can see we've got a nice little symmetrical triangle, and we actually got a little golden cross on Friday late. Average gain is about 150 points. Because this golden cross happened so close to the last one, I'm inclined not to look at it as closely as I would normally. But if we do see a break above 12,200, it could be a nice little day. Also, we were starting to rebound into the close on Friday. And again, it's all going to be on the slant that they give that Italian news tonight. If there's no bad spin on that news, then we're probably looking at an update tomorrow. Russell 2K, as you can see, we've got a nice symmetrical triangle here in place. This is what's going to lead into that January 31st rally. Small caps do very, very well over the next 3 months on average almost every year. Now, one thing to keep in mind, we are going to see some stocks that are going to see selling pressure in small cap land, but those stocks we're not going to kick to the sidelines. Case in point might be, let's pull up one real quick. ANX. Late Thursday, news got leaked, of course, as it always does. This is a very leaky market of a financing thing. Someone knew that news just based on the late day sell-off. Stock down big. These are the kind of stocks we're going to be looking at over the next 3 to 4 weeks as January popper plays. So keep in mind, even if a play does not work right now, if it does not work, it gets pushed or gets put on our watch list for entries early to mid-December for a run into January. This is the time of year where we're sort of playing two strategies. We're playing the year-end market rally, and we're also playing the sell-off plays for a January pop. So going to be some very interesting plays going into the next 2 to 4 weeks. Russell still has not broken out. I see the Russell making new highs sometime in January, which will probably come on a nice break of that 200-day moving average at 780. Chart looks really, really good here. SMH, same setup here. Pretty strong over the last couple of days. Stochastics probably has a little bit more downside, so I don't think we'll see a big move in the SMH. But then again, if we do get a breakthrough 3270, funds are chasing performance right now. The NASDAQ is up 1% for the year. Remember, we are also below our average gain on a third year of the first term of a presidential cycle. Typically, the average gain is 20%, so we are woefully under the historical average for year 3 of a presidential term. So if the stars line up, don't get European crap for the next, 6 weeks. DC is ignored by the market. We could be in store for some significant upside in this market. So if you're out there just willy-nilly shorting this rally, saying it's going to go down, you might get your face ripped off. Economic data is slowly starting to pick up. Jobs data is starting to look better. The impact from the teabagger top in July and the nonsense that started, the Japanese tsunami and manufacturing slowdown everywhere, things seem to be starting to pick up here, so looking pretty good. One thing that might crimp that a little, however, is oil. Oil testing that $100 mark. The reason for the big move in oil, of course, all the chatter about bombing Iran, whether true or not, is giving them a reason to jack up the price of oil, which is why we've got a couple of small oil plays. We're starting to actually see those plays wake up. If there is a pullback in oil, I think the lowest it's going to go is probably the 20-day exponential at 92.90 or thereabouts. If we do see a pullback to that area, it might be worthwhile jumping into one of those oil ETFs. Otherwise, we could be looking at a pretty decent pop if we get a break of 100/101 on oil. Anyway, let's jump into some stock plays right now. We've got a lot of charts to go over here. CYTR volume has picked up significantly since Wednesday. We've got the publication of their leukemia data this week. Traders are starting to move in ahead of the December presentation of that data. 40 cents breakout gives us 47, and then a move up to that 200-day moving average, which is what our goal is. 40 should light this baby up. All the indicators are a go. Volume is there. This is a classic January popper setup, and we could be, I would not be surprised to see the stock up here in the 60-cent level in December or January. Would not surprise me at all. I'd actually be a little annoyed if we don't see that price. PopScan has some nice setups. I'm actually going to go over a couple of them here, but definitely check out this weekend's PopScan list. Some very, very nice chart setups. Vonage is on strong watch for tomorrow. Nice bottomed out chart. 284 break. We could be looking at, at least a move up to that 3 area. RSI about to break 50. Stochastics in the basement, definitely a must watch for tomorrow, as is HNSN. Now, you see this chart here? This is what you call an inverted flag formation. Typically, you'll see me say how flags are bullish. You've got the flagpole going up and the flag at the top. This is an upside down one. Here's the pole, here's the flag at the bottom. Typically, those are bearish setups. However, for an intraday play, a break of 240 here, especially if it comes on volume, could give a nice, 10 to 20 cent move here. So definitely watching this one closely tomorrow for a potential break, especially if volume comes. And, stochastics are down where we like to see it. Just another one to play some watch. If volume comes and our buy triggers, this is one that could do very, very well. CXM took a few days to break out here. Finally, nice 20% or so move over the last couple of days. 50 cents will probably bring even more buyers in here. RSI looks great. Positive MACD cross very likely tomorrow. And, check out stochastics and unbalanced volume. Suggests that there is news coming here. Remember, they had that FDA approval, which was the reason for the big run here. Partnership news is probably coming, and this market is as crooked as it has ever been. News is leaked to everyone in the know, and nothing's done about it lately. So the fact that volume has picked up here over the last couple of days, I would assume someone in the know knows some news is coming. The uranium stocks, these are another couple of plays to keep on watch tomorrow. URRE, DNN, URG, all popped on the pop scan for this weekend. Typically, when we see stocks in the same sector start to show up, could indicate a sector move. I like seeing multiple stocks in the same area pop up. This one's on watch tomorrow. Refer to the pop scan for where entry is, but definitely place all these on watch. It's been a nice little sell-off on this one, and it's gotten pretty tight over the last 3-4 days. Could be ready for a nice little rebound with the right news tomorrow. ODP, Office Depot, 265 breakout. This could be one that could go on a nice little run over the near term. All the chart indicators look very good. Volume has been really positive. Indicators and the setups on them are exactly what I like to see. Definitely one to place high on your watch list. PEIX, monster win from the breakout alert a couple of weeks ago at 50 cents. On Monday, it pulled back to 54 cents. Remember when we booked our gains in the 70s, pullback rebuy area was 55 cents, went to 54. I know some of you guys picked that up on Monday. 95 cents on Friday, almost 100% gain now on this call. Chart looks really good. The reason I put up this one-year chart, because PEIX, this reminds me of Vonage a couple of years ago. When Vonage was at 50 cents, everyone hated it. Large float, large volume trader, and then the stock ended up running back to $2. This stock was at $3.70. It was at $2 in June, $3.70. A break of 112 really could see some significant upside in this one. But let's just get to that 112 level first and see where we go. But just one that, if it does have decent-sized sell-offs, could be one to pick up some for the medium term. ZHNE, our little baby, woke up on Friday. We got a break above $1. Very, very strong. Even when that big sell-off last week, this stock was rock solid. 110, 125, 150 over the next 2 months is not out of the question here. RSI about to break 50 for the first time since its breakdown back at the T-bagger top. Positive money flow as well. On-balance volume is starting to pick up. Definitely one that could give 25 to 50% move over the next several weeks. BWEN, another little small energy play, had a big run about a week or so ago, has retraced all the way back to its uptrend line support. This one popped big when PEIX started going 2 weeks ago. Nice pullback. Earnings were decent. This stock, again, another January popper potential play. Big sell-off since the summer top. Nice consolidation. A break through 50 cents. And, with the right volume, this one could be back at 80 cents, 75 cents really, really quickly. All the indicators look bottomed out here. Could be a nice little bouncer for us this week. The other energy play, of course, is GSX, small oil play. 22 cents is what will light this one up. And, you'll see everyone on this one when it's trading up at 32 cents. So minimal downside, very nice upside. Just a nice potential play here with good risk reward. BRCD. We've played this one quite a few times over the last several weeks. Nice little setup on this one again. 475 to 482 would be your breakout here with a $5 target. But I think barring any bad news or big market sell-off, and you could be looking at this one moving up to the mid-5s over the next month, has been riding this uptrend line all the way since August. Every pullback, it's been bouncing off it. We're getting tighter and tighter on this symmetrical triangle, and if the market is up and has an upward bias this week. This is definitely one that could see a really, really big upside move. So definitely keep a close eye on it. PPHM, really, really frustrating play. Peers have been just going off, but there's been probably a fun seller on this one. They do present. There's a biotech conference this week, so we could see a lot of biotech stocks wake up. We're going to be watching that sector really, really close. These guys present. $1.10 break is probably what will bring the big move on this one, so definitely keep a really close eye on it. So that's it for the video tonight, or today. Lot of potential plays. Definitely jump into the chat room if you can. I think we're going to be very, very active going into January. And, you know, as I've continued to say, any sell-off with European stupid news is a buy. Buy the big drops and just ride them back up. And that's it for the video. If you've got any questions, just shoot me an email. Otherwise, I will see you guys in the chat room tomorrow. Goodbye.